TriMetals mining, TMI, on the Toronto Stock Exchange is entirely focused on the Gold Springs gold-silver project in Nevada and Utah. Presently, we've got about 1 million ounces gold equivalent in our resource. We've got a strongly positive PEA, and we believe that the project is permissive for the discovery of 3 to 5 million ounces of gold. The program this year is going to start with trenching, followed by drilling of the high-grade Thor vein system, which, if successful, if we can put together a higher-grade resource, could potentially significantly enhance the economics as described in the PEA. We have the legal disclaimer. The company itself, 135 million shares outstanding, market cap around 40 million, trading's pretty good liquidity, 139,000 a day. And again, the focus of the company is this Gold Springs project. The PEA shows a project with 137 million NPV at 5%. And we have a resource just under 1 million ounces. You can see there 597 in the measured and indicated, and a bit over 300,000 in the inferred category. The important point that I haven't mentioned yet is that we've got this positive PEA, and we've got nearly 1 million ounces, and we've only drilled 10% of the target. So clearly what we believe is, as we continue the exploration and drive towards our goal of 3 to 5 million ounces, that we will see sustained increase in value of our stock. Again, the exploration program this year, we're going to start off with trenching. This is a little different from prior years where we focused on the bulk tonnage, sort of lower grade but heap leachable material. It's quite important if we're successful in putting together this higher grade starter pit resource, then that sort of blows the socks off the economics that you see in the PEA itself. Why do we think going towards 3 to 5 million ounces is so important? Well, it's because these large deposits are getting much, much rarer, much more difficult to find. And in fact, probably the best example of a sort of buyout, if you like, of a project of this type was in 2011, lot different times, great times for the mining industry, much higher gold price. But Newmont purchased Frontier Gold for over $2 billion, and the prime resource there, Long Canyon, was only just over 2 million ounces. Now, I'm not saying we're going to necessarily get to that point, but the point is that if we can drive to something like 2-3 million ounces or better, it's an extremely valuable resource, particularly in a safe, mining-friendly jurisdiction like Nevada and Utah. During the sort of long downturn in the gold prices, which a lot of folks have been discussing, we've every year increased the size of the resource on this property, and we continue to do so, and that's our plan, obviously, going forward from here. In terms of location, it's a great location, lots of infrastructure. It was an old mining area in the 1880s to the 1940s, and you can see here we have railroads, main highways, power lines. In fact, we also picked up the water rights, which no one had applied for, so we have water, power, rail and road in close proximity to this project. It's large. This is quite important. It gives us much better opportunity for finding this large number of ounces. These two maps are plotted at the same scale. On the left, you see the Carlin, which is probably the best-known district in Nevada for gold, and our land position is shown at the same scale on the right. So this is a large area where we believe we have potential for potentially more than one mine. Here you see the 3D picture. It's about an 8 by 8 kilometer block you're seeing here, and the little call-outs are all areas of outcropping rock sticking out of the ground, and all of them include samples of plus 1 gram per ton, and sometimes it's 10 or 20 grams per ton. You can see the two resource blocks that we've developed. These are these 43101 blocks, one in Nevada called Gray Eagle and one in Utah called Jumbo. Probably a good point to make here is if you look at the Jumbo one, the ovals, which are sort of representation of where the outcrop is, sort of string together as a trend. and that trend's 8 kilometers long. Well, we've only drilled 1.5 kilometers of it, and we're close to 1 million ounces. So again, another point of why we believe that we really can get to this 3 to 5 million ounces over time with further drilling. This is our resource table in the PEA, the actual open pit, which was simulated for the economic study, used a 0.22 gram per ton open pit cutoff. So if you look at the 0.2 line there, you can see we've got 597,000 ounces at 0.6 gold equivalent, made up of about 0.5 gram of gold and 10 grams of silver, and a further 306,000 ounces in the inferred category. And these grades are quite similar. In fact, they're quite good with respect to other mines, operating mines in Nevada, and I've got a little list there at the bottom. In terms of the PEA itself, and again, you know, this is the really important point. This is a positive PEA, and we've only drilled 10% of the target, and we haven't started drilling the high-grade veins. But at $1,300 gold, we got 137 million NPV before tax, close to 50% rate of return. If we use someone else to do the mining, so the scenario comes out at 55 million capex, a very low capex. One of the reasons for this is what's unusual about this deposit. It starts at the surface. Many projects in Nevada, because it's been so well explored, you have to actually scrape off 100 meters of rock or something like that, but this actually starts at the surface. So we have a 2-to-1 strip ratio for mine life, 55 million initial capex, in the 600s for cash costs. So it's a good, solid project, still makes a little bit of money at $1,000 gold. But again, this is not the final project. We've only drilled 10% of the target, but we've already got a unit that would appear to be economic. This pretty slide is sort of makes me go all sort of gooey. It's exciting stuff for geologists. The bright colors are highly resistive rocks. They're actually called rhyolites. And the host rocks around them are andesites, which host most of our gold mineralization. The reason I show it is the black ovals now are the areas where the outcrop was, and the bright colors sort of show you how they all join together. And so what we found is when we drilled the boundary between the highly resistive rock and the andesites, that's where we find all the gold. So another way you could look at why we believe we're going to get to 3 to 5 million ounces, if you add up all those boundaries just on that slide, is 33 kilometers. Well, we've drilled 1.5 kilometers on the Nevada side at Gray Eagle and another 1.5 kilometers in the jumbo on the Utah side. So we've got another 30 kilometers to go, and we've already close to 1 million ounces. So we feel quite confident that as we continue to drill, we have a very good shot at becoming a very large resource. And it really does start at the surface. This trench on the Nevada side, 56 meters of 1.4 grams, great stuff, good metallurgy. We've done metallurgy on it. And we've drilled under this clearly, and this becomes the resource on the Nevada side, this block, including this trench. This year, as I said, we're doing something a little bit different. We're going to go after some of these high-grade veins. And the reason why is we've got a very robust economics in our PEA now. But if you imagine that average grade's around 0.6, think what happens if the first couple of years is 2 grams or 3 grams. We think we have a possibility of finding that sort of material, not necessarily 1 million ounces of it, but enough for a starter pit for the first 1 or 2 years. And if we do that, it really sort of blows the socks off the economics that you see in the PEA. So we think it's a worthwhile exercise this year, and then later on we'll go back to sort of steadily expanding the bulk tonnage resource. This, again, those bright colors of those highly resistive rocks, and the arrows sort of point to the edge. That's where we're finding all these high-grade gold veins. And in that little image there, you're looking at a very well-defined feature about 1.6 kilometers long. We have a couple of holes on it, several old workings, so we're pretty sure we're going to find it along that length. And again, if we can end up with a 2 to 3 gram resource, this would form an extremely good starter pit for our project. So takeaway points, we've got a very large area with a lot of gold mineralization outcropping. We've got a PEA stage project, even though we've only drilled 10% of the project. We're initiating the work on the high-grade veins, which should lead to some quite exciting press releases. And we strongly believe that we're headed towards 3 to 5 million ounces. And remember, this starts at the surface. It's got good metallurgy. We've done enough to be able to say it's heap leachable, which is the low-cost methodology. There are no royalties or liens against the property, 100% owned. And we think that we're well on the way to providing a property and the development of a property which will lead to significant enhancement of our share price in the future. Thank you very much.